Yo, what's up, everybody? How's everybody doing? Good evening, good afternoon, good morning, whatever time it is. Yo, Gat, thank you for the follow, man. I hope you kept those Tesla puts, dude. Looks like they might work out tomorrow for a little bit, at least off open. Yeah, I gotta give it a few moments for everybody to hop on, and we'll get things going. Let me go ahead and retweet this link. Give me just a moment. Yeah, this stream is just had a bunch of people ask me questions on how I use this and what is this and that what am I looking at all the time. So I figured I'd go ahead and answer those questions and just put a little stream on so that way you guys have something on file for reviewing back or at least seeing how I use it. So just hang in there. I'm gonna give it just another just a minute or two. Anything exciting going on? Hold on, let me open up Restream chat so I can see what you guys are saying. Oh, okay, it's open. Okay. Alright, it's open. The CheddarFlow streams now, dude. Yeah, so futures for now. I'll just check that one. Looking good, bouncing off. So we'll see how we open. Doesn't look bad at all. Looks like we might actually bounce off here in the morning. Dixie looks doesn't look bad at all either. Yeah, man, I could definitely if you have a couple questions about it. So if the ones who are here to watch this and learn about this, if you have any questions, if you can ask them, go ahead and put them in chat and we can go ahead and go over them. Just gonna give it about a few more seconds and we should be good. Just was waiting for somebody I told. Okay. All right, so to start off, this is basically an order flow platform. So instead of me having to go out and find options, um, they have their own algos and everything set up to where they pull up various different tickers and various different options plays that come up that they track that is interesting to that platform specific. So the info is live. Everything is live. So if it comes through right as it comes through on the exchange's end. So everything is live on this end. So that's one of the biggest things that they updated it on, which really were helpful. So let's go ahead and start. So there's two different ways to do this. You can do this in the sense of, let's say you have a whole entire tech list and you're trying to buy some options. You can either go ahead and look for each of your tickers and see, hey, which one do I want to go ahead and either short or calls, whichever one you want to do, and go ahead and just type it in up here. You can type it in and search it. So for the ones that don't know what comes up on the screen, so you have a little search bar up here where you can go ahead and search your ticker. And once you go ahead and search your ticker, we'll do Tesla in this case. You can go ahead and see everything. You'll see the time of when it came in. You can see this last minute Tesla put person. This is for Gat if he's watching. Dude, it came in the last moment, man. I think it'll be okay. So this is the timing of it. You can sort it by the tick. It's color coded for calls or puts. The expiration date, which ends up being a very important tab because that's one of the biggest things I focus on when you're looking at these things. Because short-term expiration dates are something I don't really like doing, so I won't really look for these short-term ones. I mean, unless I am doing something where it's like a day trade, which will be very rare. That's the only time I'll look for something that's like next day or next week or something like that. So the expiration date right there. The strike date's another important one. That's basically just betting on where things are gonna go. Like over here with Tesla down here when we talked about this a couple streams ago, this one up here was the target, and so I got calls accordingly for that one. So you're gonna want to go over here and see if you're aiming for something in the money is what you're playing with. If something it's out of the money you're playing with, yeah, I can Oh, it's a bit blurry. I don't know about that. Yeah, let me go ahead and send you a little something. I'll go ahead and post it in the chat actually. Here is the link. It's not free, so but that's the link. So yeah, so you're gonna want to either bet to where you're buying something where you're picking the exact target, or you're picking something above it, or you're picking something that's in the money. And obviously your goal is to either exceed or hit your target. Would my 1 to 5 contract show? No. Is it the mic? Hold on, let me see. How about? No, it could be me actually. Let me see. How about now? Is it a little bit better? I should. Okay. Okay. Cool. Okay. Yeah. Well, I have my Yeti. It's just Okay. All right. We'll just go with this way then. Yeah. I mean, they were puts were the play. I didn't really play any of the puts on my end of things. I'm happy with what I had, so I didn't really do too much of that one. Um, but yeah, we'll go over all that extra stuff, fun stuff at near the end of this. So yeah, well, once you find your target, that's the where you're going to be basically looking for the strikes. This is obviously once again just shows you directly instead of color coded. If you have trouble with that, it has calls or puts. Spot price, that's another important thing. It shows you where this person bought. Did they buy it when the price was either breaking out? So it'll show you the spot price was 830 when it was breaking out, or did they buy it at support? Where did they buy it at exactly where? Like for example, with for mine, I'd be looking for SPY. Did they buy it right at the bottom of this tab of this keygen? And that's what I'd be looking for. I'm like, hey, if these guys bought right out there and it's starting to break out, they know something. So looking at what the spot price is very important as well. Size is another thing that comes up on here. You can choose your size, like you said. You can. I mean, I don't think your one contract's gonna show up, but yeah. I mean, 150 contracts will show up. I mean, it just depends more so on if it's interesting or not. Not really per se on the sense of sizing. I'm sure there's a minimum on there though. But you can organize the size on here whether you want it small or big. And let me just take this off. And sometimes the bigger ones are the cheaper ones. Like we had some lottos come through with 20,000 contracts for 3 cents. That's a lot of contracts, but it's only 80K. But if these things work out for him, where calls where we end up pumping next week, this guy will make so much money at 3 cents. So, yeah, that's another thing you can do is just look up the sizing. Obviously, here's the pricing. This is my favorite thing to do. You have the choice of lowering it down to the degen section, which is what I like. I like cheaper priced options with timing. Some could say on there, hey, Ace, you still like shitcoins, so you're buying cheap ones because they're cheap. No, I'm buying them because I like cheap options because it's not that I'm buying straight up cheap options. I'll buy cheap options, but ones that have time. Like, for example, going down this list, as I've told you before, I like 1 month out things. So if I have this arranged to lowest price, I'll be looking down the list. I'll be like, okay, which ones are at least a month out? So I'm noticing this UUP. This is the one I grabbed. I posted about on Twitter. We'll see how this goes. This one is this. $10 index. So I was like, all right, well, if it's anything with this, let's go. And there's order flow, but let's do a little bit further out than that one. So then first one that pops up, we'll do at least September or something. Okay, here, EWZ. I really like this one. I should have scrolled down earlier while the market was open. But here's just an example right here. So I scrolled down according to price. It's still within my price range. I like playing options that are underneath $2. Underneath 50 cents is amazing. So 21 cents is great for me because I can buy a bunch of contracts. And if this does end up popping up to $1 per contract, I can go ahead and cut out contracts or ride some contracts, whatever I have to do. I'll have a good, decent amount of contracts. So right over here is not that bad at all. So that's one of the things you can do as far as looking at like the price and looking at the expiration dates combined. Cheaper price, cheaper expiration date, or cheap price and extended expiration date just basically means it gives me time to make sure the price hits. And to give you an example right on the charts. All right, so let's go ahead and the expiration date is in September, so it's not until like this point. So at any point, what I'm basically saying is that since it's already an illiquid option, I'd be fine with this even dumping a little bit more. But as long as by some point, I would say in this case would be mid-July, we start getting price action exploding towards my strike date, towards my value or whatever it is, as long as it starts exploding like that, I'll start making money ahead of time before the expiration date. And then if it starts going sideways, I'll be able to handle that decay. And then as it gets closer, if it does starts doing more pops, it'll become more liquid over time and I'll be able to exit out a little bit better. So that's pretty much my goal of what I'm betting for by that expiration date. That doesn't necessarily mean I'm holding until that expiration date. It just means I'm betting directional volatility in my direction. I'm thinking this is generally going to go up within that time period. I'm basing this off the daily chart. Now, obviously, if things go sour, that would be more so like, hey, I'm starting to see price action go down about. No, I don't want text. I would start seeing price action go over here, looking more so that it's just doing a bearish retest over there and coming right back down. So before it even got down to that point and breaks down again, I'd be out of there. Take a little bit of a loss, but that's the whole reason I'm getting something that's cheap. What's the strike? The strike for this is $40 strike. Yeah, it's kind of way far out of a way strike. So the strike's all the way up over here, well dated. So it's a little bit. It's not gonna get that affected right off the bat with negative price action. It will, but that's not really like the point that I was looking for. But I don't want to get too far into that. That's more so strategy than it is platform. So yeah, premiums you can sort by how much somebody's paying. It's a big difference. So here's a good one I can talk about. So premiums make a big difference, okay? There's Joe who works at like your office and is only making 25K a year and is now putting in all his options play into this cron play for his children. I'm sorry, work play. This is Joe right here, okay? Joe just put in his pension fund and all his money he had and said, "Okay, my kids aren't going to college. We're doing cron plays, okay?" So, this is Joe. I don't know what Joe's thinking, but when I see lower dollar amounts, it makes me wonder. It's like, what does Joe know? Why is Joe buying these two sweeps over here? One for 25K, one for 66K. Is this Joe and his friend Joe number 2? So pricing matters because when somebody has this kind of risk on these kind of things, I mean, there's more qualifications to just this. So, I mean, there's much more going to be involved, which I'll talk later on, which amounts to OI and volume. But just focusing on the premium sizing makes a big difference because somebody with lower money is going to have a different type of risk plan than, for example, when I'm looking at Chad McChadskins over here putting 7.9 million on Tesla or Amazon 5.5 million. Like these guys, like if they lose like a little bit of money, it's not that much. And for them to even put millions into an option play, like what kind of balls do you have? They must be unnecessarily large. So that's pretty serious money over there. So those guys to lose a couple 100K isn't that big of a deal. So it's not even something that interests me. But this right here, 1.2 million at IWM calls for July for $1.20 with a $10,000 size. Why didn't I notice these earlier? So this guy's betting on a full recovery over here with $1 million. Where is he? A 155 target. So yeah, he's aiming for this thing to go back, blow off, or at least get back into the box, which is a nice play. I just don't know how if it's gonna work out by the time period. But he's basically betting that by the end of June, we're gonna be popped up to where popping up around here, and this $1 million guy is gonna be making some money. 1.2 million. We'll come back to this one. I won't forget this guy. Yo, what's up, Slayer? I'm gonna go ahead and review all like charts or anything like that at the end of the stream. Right now, I'm just gonna go over CheddarFlow because I had a lot of questions. So this way, people can go ahead and reference this video and just check it out. All right, so volume is another thing. So yeah, but that's pretty much the pricing thing. I can go into that later on. But yeah, having different sizes of money makes a big difference in what type of play you're gonna do. I also am interested in players that are doing things like this as well. I don't know what the hell this is. FISV. I don't know what this is, but if we're going to be going to the moon anyway and the economy is going to recover and everything's going to get back to normal, 2022 leap calls for this one, I'd be looking into them. I mean, they're a little expensive. I mean, really expensive, but that's just like something I'm like, okay, 2 years out. Why wouldn't I bet 2 years out? It doesn't necessarily mean I'll be holding 2 years out. The ones I had for CS over here, I played the CS plays over here, buying out 2 year out calls. I wasn't even planning on making money this year. And then all of a sudden they double and triple out. I was like, holy shit. So, sometimes you get rewarded for having a good risk plan early rather than trying to come in with the risk plan halfway through. So that's why I do these longer term plays, is because I'm able to buy a shit ton of contracts, or I'm able to scale in properly in a way where I can put my stuff as a hedge towards like the market going the opposite way. Sure, I'll lose a little bit of money, but the fact that they're already odd type of plays that I'm doing that are either OTM or low volume, low open interest, they're not going to move that much. Like my forward calls barely moved. I'm in profit. But anyway, let me stay on topic. So yeah, and then it'll show you the type of plays: split, block, and sweep. I'm sure I'm gonna get a bunch of questions about this one, so we'll just talk about each one as I see them. Hang on. Okay, so sweep play is basically somebody that buys an option play with urgency. So that means that hey, they just saw it, they want to buy it, they got it. Um, you don't want to overthink that. I'm giving like a very, very basic meaning of it. You can Google it if you want to get more intense of a meaning and more of a in-depth meaning of exactly what it is. But pretty much when you see this on this platform, to me, do, nah, dude, I'm not. I'm almost never angry. I'm just trying to be a little serious on the stream and just keep it to the point. Uh, Yeah, I'm just trying to keep it to the point because last time I just got completely lost. Okay, so anyway, uh that's funny. So yeah, that's pretty much what a sweep is. It's just basically somebody that bought with urgency on it. That's all you really need to know for now. And then you have split plays. Split plays are pretty much as they sound. Somebody splitting up an order. They're basically buying for in this case over here. Let's see this split for SPY 717 249 strikes. They bought a split play, meaning half of this 55. This is half of their play, 55K. There's another half they did of another play elsewhere. They could have bought a call. They could have done something else. I don't know, but this is just half. So whenever I see on here, hey, there's just a tons of splits on some like odd thing, it makes me think, hey, this is a 50-50 bet. I really don't like playing anything with a split. On earnings, maybe, but still, even so, I just try to avoid things that have splits on them. It's not my type of style. Now, block plays. Now, this one I can go into example for my crypto people too, because you guys will understand that way. So, a block player is basically somebody that has a good amount of money that is buying in block sections, or basically in sectional buying. They're not straight up buying everything right away, but they are buying, but they could be buying more later. And there typically ends up being a certain amount that they had to buy or a certain way they're buying. Like for example, we're gonna go to Durbit Bitcoin options. You have December 25th Bitcoin options. Okay, all right. Let's go ahead and say we're gonna go ahead and pick. Okay, Bitcoin's gonna go to 14K by Christmas time, okay? We're picking this one because of the high open interest strike, and we're like, all right, let's go. We're doing this one. Now, when you look at the order books over here, the sweepers over here would be this 5, 5, 5. Those are little sweeps I'm seeing, 10 sweeps. Okay, when you see over here, there's 100 size coming in for these contracts, and they're even labeled over here as a block trade. A 25 size coming over here labeled as a block trade. The 20s aren't labeled, so I'm assuming they have it set to where 25 or over is considered a block trade. I don't know how they interpret it, but that's pretty much what this is. A bigger size buyer that's buying in chunks. You see them come up a couple times. Another 25 increment, another 25 increment. So those are pretty much what block players are. So when I see a whole entire set of block players on longer term dated calls, it automatically makes me think, hey, I'm not going to put my position sizing in a way where I'm going gung ho in the beginning. I'm going to set my position sizing to where, hey, if it does dip, then I'm going to be able to add some more with these guys. If not, then fuck it. I'm still going to go ahead and make my money. It doesn't really matter. But yeah, that's pretty much what each of those are. And now going to volume. This one ends up being, I mean, it really depends on what you like to do. Some people like to play high volume if they're doing faster trades, but for me, I prefer something like this where, okay, let me see. Well, let me skip up to open interest first. Open interest is another one. You can find things with high open interest. You can find things with low open interest. High open interest you can either add on to if you see an interesting buyer that's buying into it. If not, you can play low open interest to where you're building the open interest. And that's typically what I like to do. I like to look at these plays where it's little to no open interest. I don't really like playing the ones that are brand new, spanking zero open interest. I like the ones that have at least somewhat order flow in there, or at least somewhat open interest coming through. And the reason for that is because that shows me, hey, if something's timed dated with low open interest that and they're coming through with either block plays or constant sweeps, somebody's building something into there. And another reason it would lead me to believe more building would be is if it looks like, okay, this is, let's do over 200K. Nothing. Okay, yes. Okay. Okay, here we go. This one right here. So, NCLH. Okay. All right, NCLH. So if you notice, there's low volume, but a decent size open interest. What that leads me to instantly believe is, hey, there's low volume, but there's open interest, so there's most likely a position being built into there. I mean, I could have it even a little bit lower, but according to the TA, this is basically saying that they're thinking that this is going to dump out of the clouds and fall down by January. And what's the strike? $15 a strike. Okay, so they're just aiming for in the money by the bottom of the clouds, so probably like $13, $12 by January. So it's not to where it's looking something like this, where it's 49K open interest, 49K volume into 85K, 8,500 open interest. That leads me to believe that, hey, they're trading more of this options contract rather than actually accumulating a position. They're getting in and out, and I don't really want to go ahead and do that. At least this one, when it's like this, I can go ahead and see the order books directly and be able to tell, hey, they're either getting in or they're getting out, or this is going to pop or it's not going to pop. So those are one of the things that you'll want to go ahead and notice if you want to go ahead and trade. You can either trade things with high open interest that everybody's popping onto and you're buying somebody's blood or whatever, or build ones with brand new ones. Yo, any questions so far? It doesn't really matter which one you use. It's just all a matter of data. Everybody has their own algos. That's pretty much what it comes down to. This isn't the only platform that I use. This is the only one that I use frequently. I have two other data platforms that I use, but I use them differently to where it's not even worth explaining to everybody because it's such a professional. It's more like a professional setup on those to where I wouldn't even begin to explain to people what I'm doing. So I don't even chill it. It's that market chameleon stuff. I mean, I've used Blackbox before. Flow Algo, I'm not really too much of a fan of. I think that's yeah, not really a fan of Flow Algo, but black box stocks not bad. I mean, we're not here to talk about black box stocks, but yeah, I mean, I know the guy that runs it and stuff, so cool platform. I've made some money off it. But it's just a matter of what suits you. That has dark pools. We don't have dark pools yet. We'll eventually get dark pools and then we'll have another feature that's on here that's even cool. So it really just matters on what your preference is and if you like the setup that you're seeing over here and if you're liking the data that's coming through on our end. If you like the data that's coming through on their end, then get that data. It doesn't really matter. It's really your preference. I've had a lot of people say they really like this because it's a lot more cleaner and a lot more nicer of a setup. So that's why they end up doing this one, and that's why I like it. I like it because it's very simple, very easy, and like a monkey could figure it out. This one is CheddarFlow, so I am using CheddarFlow. You can look up CheddarFlow on Twitter, or you can go ahead and use this link and sign up and help a bro out. But wait, why didn't that link come out right? Whatever. Yeah, and another couple things you can do is you can also pull up order details at the end. This basically pulls up for the people that do understand all this stuff, the Greeks. It'll pull up the delta, theta, vega. It'll pull up the implied volatility as well, which ends up being important if you're buying low volatility to high or if you're buying the high one. Whatever it is, it'll give you a little bit more data on this end that's a little bit more in a different format. So you can do that as well. Another thing you can do is you can go over here and do a chart analysis. I always forget to use this feature. But yeah, if you ever really wanted, you can just do everything on one single thing. Oh, hot list. Oh, I can do all this over here. Okay. Yeah, so there's also over here where you can look up various type of bullish flows for which tickers, how much money, if there was more money going through them, bearish flow with the most money, top sectors with the most money today. I mean, obviously tech sectors are winning. Everybody knows this one. Tech sectors are leading the game. Everything's going crazy in tech. Financials were taking off a little bit. They're coming back down now. So consumer goods most active. Everybody's trading IWM. I would grab some IWM calls for this. Zoom, I saw some activity coming in that was interesting. Do you guys have any questions? I don't know if I forgot to check that. This does have a mobile, well, not a mobile app. It's just on the mobile website, but the mobile website's really clean. It works really well. Mobile website, I think. Well, I think you could do this over here too. Oh, look, yeah, forgot. You can go ahead and arrange your little things up here if you really wanted to. So like you could bring this one over here and then pull up the data. Okay. Very new to options. Say if you buy a call at 50 cents and the stock price moves in the money and you sell the call, P&L is simply the delta of the option premium from the sell point and the buy. Yeah, pretty much. Yeah, if you look up how delta works, yeah, that's a good way of saying it. But I was going to describe it a little differently though. So, and I'm just dumbing it down. But you're pretty much on the right track. All right, so this is just an example of for the people who are completely beginners, have no idea what they're doing. Um, you're basically, so we're gonna go ahead and use lows as an example. Okay. I always use macro time frames to base out like the basic levels of the charts. So that's one. No, I'm working on getting them to create a watch list with specific stocks as well as create a watch list to track the gains of previous ones. So that is not on there yet. So, yeah, that is not on there, but that's a good one. So we're using Lowe's as a channel. We're gonna go ahead and assume Lowe's is gonna go ahead and blow off. Okay, it's gonna just go moon. Actually, we'll do the bottom one. Actually, we're gonna go ahead and say it's gonna come back down to the channel. It's gonna go ahead and hit 105. So let's go ahead and do puts over here. So put is basically you're betting. Right now, our bet is that it's gonna end up hitting over here. Either it's gonna end up hitting 105. So we have three scenarios that can happen. It's either end up gonna hitting this zone, it's going to end up aggressively the same way it went up. It's going to aggressively start going down, which at that point, if it's doing the same type of red candles downwards, volatility is your friend, and so is directional price action in options. So more aggressive this goes down, more quickly you're going to be making profit. If this shit starts grinding like this that did over here, like this little price action down that way, you'll make money, but you won't make money until later on, and there might be a slight possibility decay might kick in depending on how it goes and what your expiration date is. But yeah, that's pretty much what we're betting here. We have a scenario where it's either going to do. That's the first scenario where the volatility just comes down towards us. Second scenario is that it does this bullshit, but still ends up coming down over here anyway. But not too long. It still ends up coming down in like a decent fashion. I would say something like something like that, not the aggressive straight down. So it comes that way. And our final thing would be is where price action ends up coming down over here with either a wick or just one single day of coming down over here. Okay, that would be your ultimate goal. This is like your money box over here, whatever it is. Let me delete this. Okay. So we're gonna go ahead and pick our option now. So I think Lowe's. This is passes over the cloud. I think it could probably do this by November. So we're gonna go ahead and do November, and it just changed my chart. Yo, what's up? Crypto love 66. Okay, get price. Okay, so that is the price currently. This is what a options calculator looks like. We're going to go ahead and pick the option now. So I already told you guys that by November, I think it's going to hit. Do we have the option to pick November? I don't. So it hops to October to January. So I'm going to go ahead and pick October. And we already decided our strike point. Our strike point is going to be either here. Now we can go ahead and pick 95 as our strike rate, but the problem with that is that now you're going OTM, which is outside of the channel. You're picking very, very far away from what the normal strike that most people would bet on. And not only that, you're betting even more on directional volatility to come up in your favor. So, I mean, the risk is there to pick a different type, like a higher striked call or a lower striked call. You might even pay cheaper for it, but you're expecting a lot more. So yeah, let's go back to puts and let's do puts. So these are expensive, not really what I like. But we'll go ahead and do this OTM stuff anyway because I'm going to do it anyway. Okay, we'll do $85 strike. That's semi-reasonable. So what I'm betting right now on lows is that, okay, so now I'm left with two options with lows. Where's the eraser? Okay, so now the options I have left with lows, since I'm doing a put, would be is I want this shit to just go down aggressively. So I would say 4 or 5, two weeklies straight gapping down. I should be in good amount of money. Okay, let's go back there. I'm gonna put in, how much money am I gonna put in? No. Yeah, 10's good. I'll buy 10 contracts. Graph range can be okay, 75. And the top can be 145. Okay. So this is the profit in percentage. So at this point, with the stock being at this point, let's just say it starts crashing, and the price ends up being at the bottom of the range. I would say, yeah, so according to this one, as long as the price ends up hitting to the bottom of the range by the end of this month, let's say it goes down, okay? Any time past 112, I'll be making 48% profit. And if it keeps going down, depending on how far it is down that day, I'll be making more and more. Now, let's just say magic happens and we end up catching up on Corona and Lowe's ends up scamming everybody and exit scamming. Okay? There's a possibility where if the price action does end up meeting my thing, even by July, August, let's just say it does dump down to my target exactly. I'm up 307%. Let's say it leaks even more. That's like 500%. So I hope you crypto people understand like why I'm so interested in that. Like something that's in like a normal pattern, I can make that much money off of, like that much percentage off of, and I'm actually betting on real companies, not some shit that launches a mainnet and then we pump and then we dump. Not some crypto I'm betting on. I'm betting on real companies. So that's just like an example. I mean, there's also a downside over here. Let's just say that the price doesn't start moving. You start getting your shit fucked up over here. Like then what end up happening is that even though you're at a 60% loss, it requires more and more of an aggressive dump for you to become in the money. And then eventually at a point it's just like, hey, you need like a financial crisis to come back into money. This is just an example to for people. It's not necessarily a play. So there's not really a play in it. HD isn't really in a channel. So, but I can show you. HD's doing some other shit right now. I don't know what it's doing. But, I mean, I know what it's doing, but it's not in the same type of formation it was in before. So, yeah, that's where we are with that one. That's pretty much CheddarFlow. That's a little bit of option stuff. What do you guys got for me? Anything exciting? No, I'm not doing any puts. This was just examples. I'm still in my plays from last time, which are my longs. I exited vet. I hope that wasn't a bad idea exiting up here. Spot flow. Yeah, I can check that. Spot, no flow for today for spot. ENPH. Okay, there was put flow for ENPH. I like that. July, nice, decent, not too far out, but not bad either. A whole month out. I like that. I mean, it's a little bit, the volume's a little superseding that one, but it's not too bad. It's 479. Little expensive ones, little expensive puts on ENPH. AMD volume shelf. Oh, oh, look at this guy. AMD volume shelf. Let's check it. On what time frame, sir? Oof, that volume shelf's down there. Let me zoom this, fix this up from down here. Okay, hold on, that's better. Okay, so yeah, volume shelf's down here. I mean, that's also the base of the cloud support as well. We have a little bit of a gap over here as well. So yeah, there's a possibility of going down on this one. In general, I have calls on AMD, so I have longer dated calls, so I don't mind holding this one. But yeah, that POC level would be basically the area I'd be looking at to see if it ends up bouncing or not. Right now, it didn't really lose anything. It's still in a daily bullish TK. It still has support over here. So oh, okay, 30 minute. Okay. Oh, look at that. Let me fix this first. Well, that's based off that. Okay. Yeah, it doesn't matter where I look at it. Dang, that's a nice spot. I don't typically zoom in like that. Okay. Ship we checked before. Bar chart versus that's completely different platforms. Like completely different platforms. Oh, bar charts. I don't even know what bar charts is, to be honest. I use big charts. Big charts is a little interesting. I use it like this. It just takes more work. Like I don't like to work that hard. I don't want to work hard. You can look at the options chains over here directly where you're going through individually picking out high OI and hoping to God there's smart money in there, but that is not my style unless I'm going for like something crazy. I never really traded dark pools or really looked too much into it, but yeah, I would assume that's institutional buying because I don't think everybody, your retail trader doesn't have access to dark pools. But yeah, guys, that's pretty much the stream. There wasn't really too much to this one. I'm gonna just check SPX real quick. Looks like it's holding and it's pumping. So let's see. Let's hope it holds. Big points over here would be is going ahead and breaking over 350. If we can break over 350, this will be good. BYND, hold on, I'll toss you up, puppy. Here. BYND. We gotta feed those people taking over the city, right? With fake meat. Had a little bit of a pullback, but overall doesn't look like shit. Until Ichi starts closing up, I would say this isn't bad at all. Did you go through finding unusual activity and the best way to trade them? I didn't go over that. I didn't go that specifically into the filters part of things, but yeah, unusual activity typically is like to me is like insider trading. So these are ones I end up looking for ones on. So Cisco 626 calls, Macy's puts, Uber puts, Kron calls for some reason. So yeah, very interesting flow. Sometimes you can even get it to where they come up with highly unusual ones. As far as how to play them, that all matters depends on your TA. If your TA shows that hey, it's going to be coming down or whatever direction these guys are betting, like TLT puts and everything, like if you think that was a fake one, then don't use it. Oh yeah, dude, I would appreciate it if you used it. Here you go, good sir. And yeah, I mean, if you guys do want to learn about the filters, I mean, you can filter it to whatever. Here's the section that you guys love so much, the biotech and healthcare sector. Let's go. Let's find some shit over here. Cheap one. Okay, BMY. Wow, this is really cheap. 619. Okay, this one. VBIV. VBIV. Okay. Price compressed all the way to the end. Can it continue? These guys think it will by January. Let's find the longer dated ones. SMGO. Oh, or SGMO. Oh, SAGMO. I think we found this one before. Nicola, thoughts? I know I saw them too. I wasn't sure what to make of that one, just 'cause the stocks just was stupid going up. Like, look at this. This is disgusting. These guys are just buying calls left and right on this one, and it's not cheap calls either. They're all expensive. NKLA. Yeah, yeah. I'm like the word. Like, this isn't too bad. I mean, it's sort of like going, but I don't know. I don't know how to play price discovery things that end up doing like this crazy stuff like this. I don't even know why they boosted up because none of the financials were really meeting up. So I was like, all right, well, you guys are just following the train. Yeah, I can explain the trading style real quick. You guys might not get it, but I will definitely explain it. So I will give you a great example because I've been using this example all day long with everybody. Okay, so my trading setup involves Ichimoku. So if you're using TradingView, you can just type in Ichimoku. I do not use Ichimoku without B bands, so you might as well just toss on B bands. And if you don't like the outer bands and you understand how the outer bands of B bands works, then you can turn off the outer lines and make it invisible like this, or almost invisible. So I use those two things combined with the other things as the most basis of everything. So that is my source right there, those two, Ichimoku and B bands. Everything else is just something to more so fine tune things and perfect tops and bottoms. But that's the basis of everything. So, what I typically look for on these kind of things is I like looking at the chart and I like looking at price compression for it in general. So, I noticed over here, hey, it's doing this mythical triangle, whatever it is, price compression, however you want to call it. It was doing that. Second thing I noticed over here is this is all I played, and several people on stream have watched me. I'm going to go over through the results of what this happens here. So my whole thing was this week, hey, any kind of cloud breaks inside the cloud, I want legitimate ones. I want ones that are braked in, bullish TK is confirmed, or at least it's inside the cloud to where it looks like it's going to go ahead and break out. Because if we have a cloud break inside on a macro time frame, typically it means it's going to be heading to the top end of this cloud, somewhere on the top end. Maybe not exactly to the top or very close to it. And then the following move after that, once it reaches up here and consolidates a little bit, typically ends up being a blow off as long as everything's nice. This is a great example of that right over here. Price compressed, got into the clouds, blew off. Um, that's pretty much what my style is. And another result of this one, this is the one that we did on stream. I told everybody over here, I was like, yo, find me these setups. Stop bringing me these terrible setups that are like not already blown up. So a lot of people on stream showed me, they were like, yeah, man, dude, these are set up. These are just getting into the clouds. And these had order flow supported. I rarely trade things that are not supported by order flow. Like maybe once in a blue moon I will. So yeah, we have IVR that ended up getting into the clouds, popping on through. We have MIT, which was already inside the clouds and then ended up blowing through. Riggs another one which was at the top and did a little blow off and came back down. So I think this can still come back up. But those are one of the biggest things I was focusing on right now. There are other things. It just depends on whatever works for you guys. I mean, that's my basic is Ichimoku is what I'll focus on. Like for Credit Sushi was a little different of a play. It wasn't really TA, like this wasn't even TA based of a play. All this play was me doing this. I will show you this one. Twitter CS. So back on March 23rd is when I bought my CS leaps, and the main reason I did it was because I saw this order flow come through. As you can see, this is a repetitive order flow. It was multiple different plays coming through. There were several block plays coming through as well as split plays. But the catch was it was low open interest. and I noticed this high volume. I was like, what's up with this volume? And they were so nicely priced for options that were 2 years out. I was like, wow, 2 years out for Credit Suisse for 30 cents. Um, so I was like, yeah, all right, well, fuck it. I'm gonna go ahead and play it because there's order flow supporting it. The TA's not that retarded because I think if we end up getting into the clouds, I know where that price action is gonna end up going. So can we in 2 years get into the clouds? I mean, why not take a stab at it? I had extra capital and it was something where I can put it in for quite some time. And the way the play was I knew it wasn't gonna decay on me. So that was cool. I was like, all right, well, let's go ahead and get in on that one. And that one was over here, CS, Credit Suisse, options chain, January 22, $15 strike. There's a decent amount of open interest too. There's 25K open interest. All the other strikes have like nothing in there. So now these bad boys the other day touched 70 cents. And I wasn't planning on making money for a year. So I put that much amount of money into it, assuming that, hey, I'm going to put a good chunk into it, not make money in a year because this is more so I'm looking at it as an investment. So I was sitting and forgetting until I get an alert that, hey, your options have doubled. I was like, what the fuck? I was blown away. I was like, yo, that's nuts. So yeah, these came through at about 30 cents over here. I got in around that. I got in actually cheaper than these guys. I kept watching these guys, so they got in on a loss at a day at 25 cents, and I scaled in a good amount at 25 cents, and I scaled in a little bit at 30 cents. So, but they really didn't move for quite some time, and then eventually when they ended up popping, they went over 60 cents. They went up to 70 cents. I was like, wow, insane. So I mean, my goal for leaps always has been, hey, I want to make money, but I want to make money over time. But then sometimes it just pops up so high. It's like, do I want to go ahead and take profit now, or do I want to go ahead and wait to the expiration date and test it out? Because this is my first time testing out like longer dated options and like really, really longer date, like leaps. I don't typically do leaps. I've only been options for about 2 years now coming up on. And I've never done leaps. So I'm assuming I just don't know how to play them. That's the only issue. Like they pay out definitely. It's just I want to make like 1,000%, and that's like in a year. That's the whole point of me doing leaps. I don't want to make a couple 100% and get out. I'm putting money in there to make a lot of money. I don't want to just do a little bit. I want to really bet on the company, get those things really deep in the money, and then exit. So that's just another way to play. Um, But yeah, good stream. Thank you everybody for joining. And if you guys want to retweet this, that'd be awesome. If you want to use that ref link, that'd be cool too. And yeah, thank you so much and have a good night, guys. See ya.